Welcome to Finance Frontier, broadcasting from San Francisco's innovation hub of Silicon Valley, where the future of finance meets groundbreaking innovation. I'm Sophia, and today's episode is titled Finance Frontier, Bridging Finance and AI from San Francisco's innovation hub of Silicon Valley.
And I'm Max. Today, we're thrilled to be in San Francisco, a city known for its iconic Golden Gate Bridge, tech giants, and vibrant financial district. The perfect place to explore the latest trends in finance and innovation.
Absolutely. Get ready for a power-packed episode where we break down the latest and most impactful developments in finance. We'll analyze the June jobs report with its mixed economic signals, dive into significant regulatory changes affecting financial institutions, and discuss the implications of rising mortgage rates on the housing market. We'll also cover the legal proceedings against Boeing that could reshape the aviation industry, and explore Robinhood's potential expansion into crypto futures.
But that's not all. In Chapter 3, we'll dive deep into the trading and investment opportunities with Iris Energy Ltd., a company at the intersection of cryptocurrency mining and renewable energy. We'll discuss key financial highlights, risk-reward ratios, and recent developments.
In Chapter 4, we'll explore a cutting-edge business idea involving an AI-driven ESG scoring platform, providing valuable insights for sustainable investing. Finally, we'll discuss Robinhood's potential expansion into crypto futures and its implications for the market.
Stay tuned as we explore these fascinating topics. Make sure to subscribe on Apple Podcasts or Spotify so you never miss an episode. This will help us climb the charts and reach more people. Follow us on Twitter for live updates and insights.
Let's dive into Chapter 1, Top Finance News. Max, what's our first story?
Our first story is the June jobs report. The U.S. labor market added 206,000 jobs, but the unemployment rate rose to 4.1%. This indicates a mixed economic picture where job creation continues, but the rise in unemployment suggests underlying issues. Economists are divided on what this means for the economy moving forward. For instance, sectors like healthcare and professional services are seeing significant growth, which is promising for future economic stability.
What might be causing the rise in the unemployment rate despite the job growth?
The increase in unemployment could be due to more people entering the workforce, perhaps in response to an improving economic outlook. However, not all new entrants are finding jobs immediately, which temporarily boosts the unemployment rate. We'll need to monitor whether this trend continues or stabilizes in the coming months.
Next, let's move on to significant banking news for June 2024. What are the key highlights?
The end of Chevron deference is a major regulatory change that could affect how courts interpret agency regulations. Chevron deference allowed courts to defer to an agency's interpretation of ambiguous laws. Its removal could lead to increased litigation and uncertainty in regulatory compliance. Additionally, there are growing concerns over commercial real estate, CRE, especially with rising interest rates and the potential impact on property values and loan defaults. These developments are crucial for financial institutions to monitor closely.
How might these changes impact financial institutions?
Financial institutions might face more legal challenges as businesses and regulatory agencies adjust to the new legal landscape without Chevron deference. This could result in increased compliance costs and a need for more robust legal strategies. Regarding CRE, rising interest rates could lead to higher borrowing costs and lower property values, which might increase the risk of loan defaults and impact the financial stability of institutions heavily invested in CRE.
Let's discuss the recent rise in mortgage rates. What does this mean for the housing market?
Mortgage rates in the U.S. have risen for the first time in 5 weeks, reflecting changes in the economic outlook and Federal Reserve policies. This increase could impact homebuyers' affordability, potentially slowing down the housing market. The rise comes after a period of declining rates, which had spurred a flurry of refinancing and new home purchases. Higher rates might deter potential homebuyers and reduce the volume of refinancing activities, cooling the housing market.
Are there any specific data points or trends we should note?
Recent data shows a slight decline in mortgage applications as rates increased, indicating that potential buyers might be holding off. Additionally, the rise in rates could lead to a slowdown in home price growth, providing some relief to buyers facing affordability issues.
Now let's turn to the legal proceedings against Boeing. What can we expect from the criminal charges related to the 737 MAX crashes?
The U.S. plans to charge Boeing criminally and seek a guilty plea over the fatal 737 MAX crashes. This could lead to significant fines and stricter regulatory oversight. The legal proceedings focus on alleged fraud and concealment of safety information from regulators and the public. This case could have broad implications for corporate accountability in the aviation industry.
What broader implications might this case have for the aviation industry?
The charges against Boeing could lead to increased regulatory scrutiny and potentially new safety regulations for the entire industry. It highlights the importance of transparency and accountability in corporate practices. Aviation industry representatives are closely watching the case, as it may set new standards for industry practices and influence how companies handle safety issues in the future.
Finally, let's discuss Robinhood's potential expansion into crypto futures. What are the details?
Robinhood is considering offering crypto futures in the US and Europe, expanding its services beyond stock trading and cryptocurrency investments. This move aims to capitalize on the growing interest in cryptocurrency derivatives and attract a broader range of investors. Offering crypto futures could open up new opportunities for both retail and institutional investors, but also comes with regulatory challenges.
What could be the potential benefits and risks of this expansion?
The potential benefits include increased market liquidity and new investment opportunities for retail investors. However, the risks involve high volatility and the regulatory hurdles Robinhood will need to navigate. Successful implementation could position Robinhood as a leader in crypto trading, but they must carefully manage these challenges to protect their users and ensure compliance.
It's fascinating to see how Robinhood continues to innovate. What do you think is next for them?
Robinhood's continuous innovation suggests they are looking to diversify their offerings and remain competitive in the fintech space. We'll likely see them exploring more financial products and services, potentially even expanding into international markets more aggressively.
For the detailed insights. To summarize, the June jobs report shows mixed signals with job growth but rising unemployment. The end of Chevron deference and concerns over commercial real estate highlight significant regulatory and market changes. Mortgage rates are rising for the first time in weeks, impacting the housing market. Boeing faces serious legal challenges that could reshape aviation industry regulations. Finally, Robinhood's potential entry into crypto futures marks a significant move in the financial markets.
Each of these stories shows how dynamic and interconnected our financial world is. Staying informed about these developments helps us understand the broader economic and market trends.
Welcome to Chapter 3, where we discuss trading investment. Today we have a fascinating company to talk about. Iris Energy Ltd, ticker symbol IREN. Max, before we dive in, we tweeted about Iris Energy's trade a few days ago. Can you give us an overview of this company?
Sure, Iris Energy Ltd operates in the technology sector, focusing on cryptocurrency mining and renewable energy data centers. They are heavily involved in Bitcoin mining and are committed to using renewable energy sources to power their operations. This combination of technology and sustainability is quite promising.
That sounds like a promising combination of technology and sustainability. What are some key financial highlights we should know about?
Currently, Iris Energy stock is priced at $14.39, with analysts targeting an average price of $16.33. However, based on revised expectations, a more ambitious target price of $20 has been set. The stop loss is set at $12.89 to manage risk. Key technical indicators include a 50-day EMA of $8 and a 200-day EMA of $9, with an RSI of 60, indicating a neutral to bullish trend. The average trading volume is around 500,000 shares.
How does the risk-reward ratio look for Iris Energy?
The risk-reward ratio for Iris Energy is quite favorable. With a target price of $20 and a current price of $14.39, the potential reward is $5.61. The risk, with a stop loss at $12.89, is $1.50. This gives us a risk-reward ratio of 3.74, meaning for every dollar risked, there is a potential reward of $3.74.
That's quite compelling. What recent news or developments should investors be aware of?
Iris Energy is expanding its data center operations, supported by a substantial $425.3 million reserve. They aim to increase their Bitcoin mining capacity to 30 EH/s and their data center capacity to 510 megawatts by the end of 2024. Additionally, they are exploring monetization options for their power and land portfolio, including asset sales and joint ventures.
It sounds like they have strong growth potential. How does the technical analysis support this?
The current price of $14.39 is significantly above both the 50-day EMA of $8 and the 200-day EMA of $9, indicating strong bullish momentum. The RSI is at 60, which suggests a bullish trend, but it's approaching overbought territory, so investors should keep an eye on it. This bullish momentum is further supported by the high trading volume, averaging around 500,000 shares.
Given the technical indicators and the recent news, what strategic insights can we draw for potential investors?
The expansion plans and the substantial financial reserve highlight Iris Energy's strong growth potential and financial health. Analysts have raised their price targets based on these factors, with some projecting a target as high as $24. The company's strategic focus on increasing its Bitcoin mining capacity and exploring monetization options for its power and land portfolio positions it well to leverage the growing demand for cryptocurrency and renewable energy data centers. Furthermore, the anticipated upward adjustments in earnings per share (EPS) due to increased revenue forecasts provide additional justification for a higher target price.
It sounds like Iris Energy is well positioned for future growth. How should investors approach this stock?
Investors should consider the strong risk-reward ratio and the company's growth potential when deciding on their investment. Setting a stop loss at $12.89 helps manage downside risk, while targeting a price of $20 or higher offers substantial upside potential. Monitoring key technical indicators, such as the RSI and EMAs, will also help investors make informed decisions. Given the positive outlook, Iris Energy represents a promising opportunity for those interested in the cryptocurrency and renewable energy sectors.
Now let's discuss some interesting insights we found on Twitter. A user named Shay Bolower recently posted a detailed update on his growth portfolio for June 2024. Last year, his portfolio saw an impressive 87% increase in 2023, driven by strong business spending, particularly in Q4. This sets a high benchmark for evaluating the performance of his current portfolio.
Shay noted that despite a broader economic slowdown in 2024 and high interest rates, his portfolio still managed a 10.4% increase year-to-date. This year's performance should be viewed in the context of last year's exceptional gains. He highlighted that most IT budgets this year have been allocated to essential AI components like chips, servers, and computing power, which are crucial for future AI software developments.
It's interesting to see how these trends are affecting different sectors. How can we expand on this to add value for our listeners?
We can dive deeper into Shay's insights by discussing how the allocation to AI components is expected to drive future growth in the software sector. Investors can consider companies specializing in these areas as potential high-growth opportunities. Additionally, understanding the impact of high interest rates on the tech sector can provide context to Shay's portfolio performance. This includes how interest rates affect capital expenditure and investment in technology.
That's a great point. What about Shay's long-term investment strategies?
Shay's focus on companies like MongoDB, $MDB, Snowflake, $SNOW, and Tesla, $TSLA, suggests a strategic bet on long-term technological innovation despite short-term economic headwinds. This aligns with a value investment philosophy where holding high-potential stocks through market fluctuations can lead to significant gains. We can offer insights into identifying and holding similar stocks with strong long-term potential.
And how does this fit into the current AI investment landscape?
The current investment landscape for AI is focused on foundational technologies like chips and servers, which are essential for future AI advancements. Analyzing which companies are leading in AI hardware and software development can help our listeners understand market trends and position their portfolios accordingly. Providing practical tips on incorporating AI-driven tools into investment strategies can also add significant value.
That's a powerful tool for any investor. Can we also talk about how platforms like SavvyTrader.com can help our listeners manage their investments?
Absolutely. SavvyTrader.com is a fantastic platform for both new and experienced investors. It allows users to consolidate all their investments in one place, making it easier to manage and monitor their portfolios. The platform provides real-time data, performance tracking, and in-depth research tools. For those looking to find investment leaders who consistently outperform the market, SavvyTrader.com offers the ability to subscribe to portfolios like Shea Bolowers for detailed insights and trade notifications. Shea has over 1,000 subscribers who pay $25 per month to access his recommendations.
That's really useful. And for listeners who want to share their own investment strategies,
SavvyTrader.com also provides an opportunity for investors to monetize their expertise. By sharing their portfolios and charging a subscription fee, they can earn money while helping others make informed investment decisions. This creates a community of knowledge sharing and mutual growth. Plus, the platform's private community feature allows for direct interaction with subscribers, making it a great way to build a following and engage with other investors.
Max, I think it would be great if we also started a SavvyTrader.com account. We could share our recommendations there so our listeners can see our performance and follow along.
That's an excellent idea. We'll set up an account and begin sharing our portfolio and trade insights. This way, our listeners can benefit directly from our recommendations and track our performance over time. We'll make sure to provide updates on the podcast and our Twitter profile.
That sounds like a valuable tool for any investor looking to stay ahead. Should we share Shea Bolowers' insightful portfolio update on our Twitter profile as well?
Definitely. Sharing Shea Bolowers' portfolio update on our Twitter profile with a comment about how we've discussed it in our latest episode is a great idea. It not only acknowledges Shea's valuable contribution but also invites our listeners and followers to explore the detailed analysis we've provided in the podcast. Additionally, it creates an opportunity for engagement, potentially attracting new listeners who are interested in AI and finance.
That's a fantastic strategy. For our listeners, if you want to dive deeper into our analysis and see the full discussion, make sure to listen to this episode. And don't forget to follow us on Twitter for more updates and insights. Welcome to Chapter 4 Finance Series. Today, we're exploring the growing field of ESG investing. Max, can you start by explaining what ESG investing is and why it's gaining popularity?
ESG investing stands for environmental, social, and governance investing. It's a strategy that incorporates these three factors into investment decisions. The goal is to generate sustainable, long-term returns by investing in companies that prioritize environmental sustainability, social responsibility, and good governance practices. ESG investing has gained popularity as investors become more conscious of the impact their investments have on the world.
Can you give us a brief history of ESG investing and how it has evolved?
Certainly. ESG investing has its roots in socially responsible investing, SRI, which began in the 1960s and 1970s. SRI focused on avoiding investments in industries like tobacco and firearms. Over time, the approach evolved to include positive screening, where investors actively seek out companies with strong ESG practices. Today, ESG investing is supported by a growing body of research showing that companies with good ESG practices tend to perform better over the long term.
What are some of the current trends and statistics showing the growth of ESG investing?
ESG investing has seen significant growth in recent years. According to the Global Sustainable Investment Alliance, global sustainable investment reached $35.3 trillion in 2020, a 15% increase from 2018. This growth is driven by increased awareness of climate change, social issues, and corporate governance scandals. Investors are recognizing that integrating ESG factors can help manage risks and identify opportunities.
Let's talk about the strategies for incorporating ESG factors into investment portfolios. What are some common methods?
Investors use various screening methods to incorporate ESG factors. Negative screening involves excluding companies that don't meet certain ESG criteria, such as those involved in fossil fuels or human rights abuses. Positive screening focuses on selecting companies with strong ESG performance. Best-in-class screening looks for companies that are leaders in their industry based on ESG criteria. Additionally, ESG ratings and scores, provided by agencies like MSCI and Sustainalytics, help investors assess a company's ESG performance.
What are some integration techniques for combining ESG factors with traditional investment analysis?
Integration techniques include combining ESG analysis with financial analysis to create a comprehensive view of a company's performance. This might involve adjusting valuation models to account for ESG risks and opportunities. For example, a company with strong environmental practices might be seen as less risky and deserving of a higher valuation. Another technique is engagement, where investors actively engage with companies to improve their ESG practices.
What are the benefits of ESG investing?
ESG investing offers several benefits. It can help manage risks by avoiding companies with poor ESG practices that could lead to legal issues, reputational damage, or financial losses. Studies have shown that companies with strong ESG practices tend to have better long-term performance. ESG investing also allows investors to align their portfolios with their values, supporting companies that contribute positively to society and the environment.
Are there any challenges or criticisms of ESG investing?
Yes, there are challenges. One major challenge is greenwashing, where companies exaggerate or misrepresent their ESG efforts to appear more responsible than they are. Data inconsistency is another issue, as ESG ratings can vary between agencies due to different methodologies. Additionally, some critics argue that ESG investing may involve trade-offs in performance, although many studies suggest otherwise.
How does ESG investing impact corporate behavior and market trends?
ESG investing influences corporate behavior by encouraging companies to improve their ESG practices to attract investment. For example, companies may adopt more sustainable practices, improve labor conditions, or enhance corporate governance to meet investor expectations. On a broader scale, ESG investing is driving market trends towards greater transparency and regulatory changes, as seen with initiatives like the EU's Sustainable Finance Disclosure Regulation.
To summarize, ESG investing integrates environmental, social, and governance factors into investment decisions. It has grown significantly due to increased awareness of social and environmental issues. There are various strategies to incorporate ESG factors, such as negative and positive screening, and benefits include risk management and alignment with personal values. However, challenges like greenwashing and data inconsistency remain. Importantly, ESG investing is driving positive corporate behavior and market trends.
Exactly. ESG investing not only helps in achieving sustainable returns, but also plays a crucial role in shaping a more responsible and transparent corporate environment. As this field continues to evolve, it will be interesting to see how companies and investors adapt.
As we delve into the innovative world of AI and finance, it's exciting to see how technology can open up new business opportunities. Let's explore a compelling business idea inspired by our discussions today.
Today, we're focusing on the AI-driven ESG scoring platform. This platform uses AI to analyze and score companies based on their environmental, social, and governance practices. By gathering data from various sources, including company reports, news articles, and social media, it provides real-time ESG scores.
That sounds like a game changer for sustainable investing. Can you tell us more about the key features of this platform?
Absolutely. The platform offers real-time ESG scoring using AI-driven data analysis, customizable dashboards for investors to monitor ESG metrics, integration with financial platforms to incorporate ESG scores into investment decisions, and alerts and notifications on significant changes in ESG scores. This comprehensive approach ensures that investors have the information they need to make informed, responsible investment decisions.
How would someone go about implementing this idea?
The implementation steps would include assembling a team with expertise in AI, finance, and ESG criteria, developing AI algorithms capable of processing large datasets to extract relevant ESG information, creating a user-friendly platform that allows investors to access and interact with ESG scores, establishing partnerships with data providers to ensure a steady flow of accurate information, and launching the platform with a focus on sustainable investing communities and financial institutions.
This platform could really drive responsible investing practices forward. For our listeners interested in exploring this business opportunity further, we'll have more details in our show notes. Welcome back to our Stay Connected segment, where we address some of the intriguing questions from our listeners. Today, we have 2 questions that resonate deeply with our recent discussions. The first question comes from John in New York City. He asks, how can small investors apply AI in their investment strategies without significant capital?
Small investors can start by utilizing AI-driven robo-advisors, which provide cost-effective investment management and are accessible to individuals with smaller capital. These platforms use algorithms to optimize a portfolio based on the user's risk tolerance and investment goals.
Our second question is from Emily in San Francisco. She asks, with AI changing the investment landscape, what should traditional investors learn to stay relevant?
Traditional investors should focus on understanding the basics of AI and its applications in the financial sector. They don't need to become tech experts, but should know enough to critically evaluate AI investment tools and strategies. Keeping up with educational resources like our podcast can help bridge this knowledge gap.
As we wrap up today's insightful exploration of AI in finance, let's delve into the unique artworks that accompany our discussions. Max, there's more to these artworks than meets the eye, isn't there?
Absolutely. Our luxury conceptual digital art is not just a feast for the eyes, it's crafted with potential investment value in mind. Each piece is inspired by and linked to a specific chapter in our podcast, creating a unique narrative context that enhances its appeal. Drawing inspiration from the trajectory of Andy Warhol's iconic prints, which soared in value over time, we anticipate our artworks could similarly appreciate as digital and AI-influenced art gains broader recognition.
Warhol's work took some time to be fully appreciated, didn't it? How does that relate to our art?
That's right. Initially, Warhol's pop art faced skepticism and was met with mixed reactions. Some of his early works were priced modestly, often sold for a few $100s. Yet, over the years, these same pieces have appreciated enormously in value, with some reaching tens of millions at auctions. For instance, Warhol's 8 Elvises originally sold for $100,000 in the 1960s and later fetched over $100 million. We hope our art follows a similar trajectory, initially niche but growing in significance as the intersection of technology and luxury art becomes more mainstream.
And our listeners play a role in this as well, correct?
Indeed, they do. By engaging with our artwork on social media, especially on Twitter where we frequently post updates, our listeners help determine which pieces we feature. The most popular selections by our listeners are initially offered for sale on Etsy. Looking ahead, we're excited to announce plans for the FinanceFrontier AI 2025 Art Collection, a future marketplace where these artworks will be traded like collector's cards. For truly standout pieces, we'll offer exclusive, limited edition artworks as NFTs, showcasing the best of our annual collections.
So, engagement from our listeners can influence which artworks are available?
Exactly. We encourage everyone to let us know if a particular piece captures their imagination. You can reach out through the contact form linked in our show notes or directly comment on our Twitter posts. This not only helps us gauge which artworks are most popular, but also fosters a vibrant community around this innovative blend of art and technology.
For our listeners who want to dive deeper and stay ahead with the latest developments, what do you recommend, Max?
To stay ahead, we recommend subscribing to our podcast on Apple Podcasts or Spotify. This ensures you never miss an episode and helps us climb the charts, reaching more listeners. Also, follow us on Twitter for real-time updates, insights, and behind-the-scenes content. Engaging with us on social media helps build a strong community of like-minded individuals passionate about finance and AI.
Fantastic! And for those who want to continue this discussion and not miss any of our episodes, where should they go?
To ensure you never miss an episode, subscribe to us on Apple Podcasts or Spotify. Your subscription helps us climb the charts and reach more listeners, expanding our community of tech-savvy investors. Plus, it's the best way to stay updated with our latest episodes and the evolving world of finance and AI.
We also want to hear from you, our valued listeners. Your feedback helps us improve and tailor our content to your interests. Please let us know your thoughts by commenting on our social media posts or through the contact form in our show notes. Thank you to everyone who has joined us on this journey. Your curiosity and engagement are what drive us forward. Stay connected, keep exploring, and together, let's uncover the future of technology and finance.
We hope you found today's discussion insightful. As always, our aim is to provide you with the most up-to-date and relevant information in the world of finance and AI. However, please remember that the content discussed in this podcast is for informational purposes only and should not be taken as financial advice. Always conduct your own research or consult with a qualified financial advisor before making any investment decisions.
We would like to acknowledge the sources that contributed to today's episode. The following news articles were referenced:
Yahoo Finance, Reuters, CNN, BBC, CNBC, Sky News, The Washington Post.
We want to thank these sources for their invaluable information that helps us bring you the latest and most accurate news in finance and AI. For more details and the full articles, please check our show notes for links to these sources. Copyright 2024 FinanceFrontier.com. All rights reserved.